Hey everyone, haven't done a video like this in quite some time. We'll make it real quick. If you take time to read through, we've been real busy in the live trading room. And again, we have two trading rooms going. One is the algo room that just generates trades. One, we have a 5-minute model here. And you know, I like to update everyone to see how the performance is. And we're at a new equity high for the E-mini S&P. This model trades 24 hours a day. So it's a 5-minute model day trade system. So new equity high for this period from when we rolled out of June into the September futures. And then from September, we've now rolled into the December. So we've gone through two rollover functions here. This is not a trading model. This is just analysis on the SPY. And what I wanted to go through is today, how did we end the day up? Well, we ended the day closing on a falling 20-period MA. That's that red line there. I mean, the advanced decline analysis is not specifically good right now. And so we are seeing a weakness in the breadth of the market. I'm going to expand this chart to share with you a couple things that we could be looking for if there is any signs of support in the market. From where would it come from? If we want to consider, and I'm going to draw some things here. This is your I guess old school, and you're going to love what I'm sharing with you in the NASDAQ next, the Qs. But let's say, for example, we take just a simple A, B, C, D wave. And so if we go from, in the market, A to B, right? Add that distance from C, if that is a C, you know, we're going to end up right back to where we were in the July lows, which is against these highs right here, and that's what that red line represents. That's the actual target if the market has follow through, where we're going to get down to around 420. Now, if it gets hairier, it's not on the charts, but they're right here. Back in April, there was a gap in the market around 402. I mean, if things got real hairy and really crashed to 402 and everyone got ultimately bearish within the next 2 to 3 weeks, right, going into the midpoint of October, that would be an unbelievable pullback to be looking for aggressive longs, especially if the news and the media and everyone says it's the end of the world, right, for equities. All right, now I want to change this up for you, because in the NASDAQ, we did this work in the room today. At the end of the day, let me bring this chart in, which is Thinkorswim. So in Thinkorswim, you're able to have a few of my proprietary indicators. If you're familiar with the PMC, it's a relative strength comparing a product to the S&P 500. And you know, the irony is that this is a 1-hour chart. So let me change it over to a daily. Here we go. So we made a relatively newer high up against quarterly person's pivot resistance, and you can see it right here. We generated a PPS sell signal. Now, these arrows are painted on the charts when they generate sells and buy signals. Sell and buys. There was a sell, then a buy. Another buy signal, a sell signal. So, well, here's a little buy signal right there. This is not my indicator on balance volume, but this one PMC is, and this is my old boss, George Lane, with Stochastics, and I worked for him back in 80 through 82 in Chicago, the guy that invented the indicator called Stochastics. The long and the short of it is, what I wanted to point out to you today is that if we do get an A, B, C, D wave in the NASDAQ, it's pointing to about the highs of what we had in April, right? The point of breakout that the market came back in June. There's an old quarterly pivot, this pink line right there. And then now going forward, anticipating not only next month, but next quarter, you'll notice that there is strong support in the Qs right around that level. So the irony is, I have in my book, Candlestick and Pivot Point Trading Triggers. It was written back in 2005. The second edition came out in 2019, right ahead of COVID, when nobody really cared about reading about technical analysis. But in the meantime, that book highlights the power between what we call the low close Doji trade setup. Now, people that have worked with me before write about it and talk about it as a doji signal. Basically, after a run up, you get a doji. The market closes below the doji. It tells you to get in on the close of the next session open. and your stop goes above the swing high. Now, there's some other rules to it, but here's the deal. There's one, this is very important for you guys to know about the high close doji and low close doji signal. This is considered a doji right here. So you get short on a low close doji on the close of the next session open. Your risk is above the swing high. That's and so number one, you have an entry and you have a risk. With that entry comes again a holding period, which we didn't discuss. Within 8 to 10 sessions, you should see at least a 1-to-1 risk-reward ratio achieved. Now, we don't always trade for 1-to-1 risk-reward ratios. However, they're highly reliable and highly frequent. So therefore, if this is just this simple little setup between the doji closing below the low and the swing high, if we take the measurement from A to B and add that to the downside, the irony is, let's get to it, it measures, ironically, right into about 344, 345. We'll round up and say 345. Now, Thinkorswim is already projecting and giving us, based on the current prices, if with the assumption that the monthly high is in, the low is in, and the close is in, it's suggesting next month. And it'll change, of course, because the month's not over until Thursday's close, but it's also projecting a strong support around 343 to 347. What's the midpoint of that? Right around 345. The irony is it's the 1-to-1 risk-reward ratio. Let's take one other factor that a lot of people do. My friend Larry Pesavento, who was a big, probably the best and foremost educators and traders using Fibonacci, Gartley, and his work's been cited by, I don't know, guys from the comment on CNBC to Robert Miner, and a lot of people have used his work. Joe DiNapoli was a student of his. So anyway, Larry's an old friend of mine, and Larry's big in Gartley as well as Fibonacci, of course. And the ABCD wave is kind of interesting, and if this is considered to be A and B, and you add that distance, and if this is from B to the swing high, and that becomes C, if you add the distance from AB to C, you get a price projection of about D, which is also right in that same target. Ironically, I mean, maybe it overshoots the runway a little bit. Maybe we get a little fear in the market, but right now, that's what the market is projecting for a downside move. We also noted that today we closed below that swing low. This would also be, for most traders, a very bearish setup. It closed below a swing low. That's not any swing low. Other technicians, we call this a 3-bar reversal. 3 bars to the left, 3 bars to the right, or higher, as you see. And we closed below that line in the sand. It should show some follow-through momentum to the downside. So don't be in a haste to be catching the dip. Start watching the measurement objectives that are all pointing to A, old school ABCD waves, B, low close doji, my work, C, the person's pivot indicator, both on 2 time frames, which is called a confluence. We have monthly, and you'll see right here, it says we have monthly pivots, and we have the quarterly person's pivots, and that's what these 2 green lines are projecting. So anyway, with that said, if you wanted to take a couple minutes, we actually posted that in the room right there. Yesterday, we had a really good setup in the SPY. We talked about the market closing. It would open and suggest the highs of the week could be in. We posted that right as the market was closing for our traders, and we had some people take advantage of that by going short the market and long SDS. If you want to see what we've been doing in the live trading room, we were talking about reversals in at least best performing sectors last week, being long XLF, energy, regional banks, and insurance. Worst performers, which kind of came to fruition, semis, Bitcoin, real estate, etc. We've had a couple option plays, and again, you can take the time to read this. Did a nice little trade with Costco for earnings right there, and then, of course, telling people, listen, you want to take a profit on that. So it's been busy in our live trading room. There's been no doubt about it. And I thought you would need to know and should know about the conditions of where the market is right now, what measurement objectives look like, what objectives techniques can you use and benefit from, whether it's from, again, my work with the current environment and the S&Ps, or whether you're looking at perhaps Bitcoin. And while I'm on that subject, this is the GBTC, and we have a trading room model that runs on the GBTC. It's currently short. It's got an orange line. That's that's the emergency stop. So if the market pops, it will stop itself out. We have an SQQ model, which is now flat. It took a little bit of a profit. Trade performance there, it just popped off a new equity trading high. We'll see how this thing performs. We also have, let's see, the VXX model, which was short, covered it short, and it's flat. This model only goes short, and it's had, it's not really done a whole lot, but it's still hovering closer to its equity highs for the year. And then finally, in the SPY model, this is a 60-minute SPY model, and it's at a new equity high right now. So the trade models that we project in our live trading room are doing well. If you're not familiar with the work, come in and sign up for a trial, and you can either listen to me babble a little bit about trades, and I post them in the room. What's really neat about this software that we use is when I type something up, it's because I've been talking about it and I give descriptions. So if you come in the room late and you miss something, you say, gee, John was talking about Costco, and if we were in them from yesterday, take half off now at 44. He talked at 10:28 in the morning. Go up to the top where there's a toolbar and click on it, look for recordings, and look for the time frame, 10:28 or thereabouts, and you can listen and watch and review exactly what I had said about the particular trades or setup. So that's one of the neat features about this. It's pretty transparent. It's extremely transparent. Trades are posted as they occur, real time, and you can see what the position is, what the size is, what time it was entered, what the trade profit loss is. Right now, the E-mini S&Ps flipped from a short to a quick long, and when the market reopens in 8 minutes, it's exactly 552. If the market's lower on the post-market or the new session trade, we'll be either out or be taking a profit soon. Anyway, thanks for joining me, and I thought you might need to know the importance of the high close doji was not just a trade, pattern. It was a system. It told you where to get in, where to place your stop, your holding period, if you're wrong the market, and what's the expected rate of return. So you had a profit target, holding period, entry, and risk. And that way, for a lot of traders, especially those that are new to trading, it's a great methodology to not act impulsively, number one. And number two, you can also use the strategy to help signify, if you're trading options, what's the strike price I want to go down? What would be the one-to-one minimum profit objective we could see here? And if you're looking for a 15 S&P point decline, then obviously you could maybe do a bear put spread and set it up on the strikes around the parameters of those 15 points. And you don't have to go out 3 months in advance. You know that if this move is going to happen on a daily chart, it should happen within 8 to 10 days. So therefore, you don't have to go out to long durations. You can reduce your theta exposure on an option, thus reducing your cost basis on the trade. Thanks for watching, and we'll update more videos as, of course, we have time. And as you can see, once again, I want to apologize for not doing a lot of YouTube videos, but between setting things up, the live trading room, the advisory service that we run, and the small managed accounts that we handle, it's a toss-up, but there's only so many hours in the day. So anyway, this video I think would be good for you guys. If you like what you hear, give me a thumbs up. If you don't, well then post why you don't like it. But if it's because of sound or quality of the graphics, I can't help that. But the material, by the way, is solid. Thanks for watching, and we'll update you another time. Thanks.